All right. Hello and welcome, everyone. It's great to have you back for the MLA Productivity and Profitability webinar series. My name is Hilary and I work for the Webinar Coordinators Home Sacket. This webinar series will cover topics designed to assist sheep and cattle producers to increase the productivity and profitability of their businesses. To kick us off, we have a seasoned presenter in Matt Dalgleish from Thomas Elder Markets to discuss the impacts of COVID-19 on the Australian lamb market. Next week, we'll have Michelle Jolliffe from Agriculture Victoria taking us through late spring fodder conservation. From there, we'll deliver a topic every fortnight with a small break around Christmas and New Year. So just to get it out of the way to begin with, at the end of each webinar, you'll be presented with a survey. Could we please ask that you take 5 minutes to complete this survey just to provide us feedback, to MLA, Home Sacket and the presenters. And we use this feedback to make sure that we're delivering relevant and informative content. Just off to the housekeeping, this control panel will be at the top right-hand corner of your screen. The red arrow on the left collapses and reinstates the control panel. You should be able to hear us, but we cannot hear you. So Matt will deliver his presentation and then get to questions at the end. So please type your questions in the box provided. I will relay them to Matt at the end of the webinar and we can go through them then. So to introduce our speaker for tonight, Matt is a graduate of Economics and Education. Matt as a graduate of Economics and Education, Matt has had a keen interest in markets of all sorts from an early age. After more than a decade working in foreign exchange markets in Melbourne and London, Matt spent time teaching VCE economics and special needs education. Making the transition into agricultural markets analysis was an exciting opportunity, enabling Matt to use his data analysis and forecasting skills to provide commentary and strategic advice to the agricultural industry, particularly within the livestock sector. Matt has become a prominent agricultural market analyst, often quoted in the agricultural press and sought after for his independent, data-driven assessment of agricultural markets. In his spare time, Matt can be found at the commercial pig farm he co-owns on the outskirts of Bendigo, searching for the vegetables in his weed patch or getting started on another batch of home brew. So welcome, Matt. I will make you the presenter and we can get underway.
Thanks for that, Hilary. And I'll just wait till it pops up for me.
Have you got it there now?
Not yet.
Well, just check behind your screen, maybe.
Oh, there we go. No, it's just come up now.
Okay, great.
All right, so I'm assuming you can see. You can see that?
Yep, that's.
Yep. Now, you can't see my my panel, can you?
No,
you can
no,
see
just your slide.
Yeah. Excellent. Yeah, I might just minimise that just so it's out of my way as well. All rightio. Okay, thanks for having me, Hilary and Home Sacket. It's a great series that you produced last season, and yeah, it's good to be back. And just want to pass my thanks also to MLA for obviously funding the session and inviting us on. I'll just quickly outline Thomas Elder Markets is a new venture that Andrew Whitelaw and myself have set up in conjunction with the Elders Group. So we're separate to Elders Rural Services, a bit like the other Thomas Elder parts of the Elders business, Thomas Elder Consultants and Thomas Elder Institute, so TEI and TEC. We're the third part of that, Thomas Elder Markets, which is like I said, an independent market analysis firm looking at the data and assessing agricultural markets and hopefully informing participants within the sector. So that's the website. If anyone wants to jump on, we do have regular analysis across most of the important agricultural commodities for Australian producers. We cover up on grains and oilseeds, cattle and sheep, obviously wool, and fibres. We'll also from time to time look at inputs and other things that are of importance. So the website's totally free. We have short articles on there fairly regularly, so it's just as simple to jump on the website, have a look, no catches, no gimmicks. If you want to get informed about when there's a piece up there, you can just pass us your email address and you'll go into the mailing list, so just so you're informed when there's a new article, but you won't be bothered for any promotional stuff other than just passing us your email that first time. If you're on Twitter or the social media stuff, so Thomas Elder Markets has a Twitter account there. I've also got my own private one at Meatwatcher, and Andrew Whitelaw at Wheatwatcher, our private Twitter accounts, which we put on posts fairly regularly in the agricultural space for those that are interested there. Also, we have a podcast called Ag Watchers. You can find that on any of the streaming services you usually find your podcasts. There's quite a few of them, so I won't have to go through there, but anyone that's interested in podcasts, you should be able to find us if you're interested in having a listen to some of our commentary. We have some quite a few regular guests on there as well, just talking about the interesting things that are developing in the agricultural space. And that's our contact details if you need to get in touch or send anything through to us. At the end of the session, I'll have some of this stuff back up again at question time in case you missed it, and I'm pretty sure this is being recorded, so should be able to find it fairly quickly. So I'll just jump into what we're going to cover up on quickly this session, and as Hilary said at the end of the session, happy to take questions on anything that's you know, they may need more clarification on, or things you want to find any further information on. So if we jump straight in and just have a quick look at what's the situation with supply and start to see how COVID's playing out, particularly with regard to what's been going on in Victoria recently. I noticed not that long ago there was a little bit of misinformation out there I heard on one of the ag channels around the global sheep flock, that it had been at record lows, but actually if you look at the global sheep flock, we're actually at record highs as of this year. Significant growth through the late 90s to now, such that we're now topping over 1.2 billion head of sheep around the globe. The interesting thing though is when you look at the top 15 nations of where sheep are located around the globe, there's only really 4 of them, those top 15 nations, that actually export product. And obviously Australia and New Zealand are 2 key ones there, and indeed Australia and New Zealand equate for about 70 to 75% of export flows. And so on that chart of the global sheep flock, I've also added in the top 10 exporting nations, obviously including Australia and New Zealand's flock, but the UK and the remaining kind of 10 nations. And you can see that while the global sheep flock is at record highs, it's actually the sheep flock of the exporting nations is at record lows pretty much. So we've been below that 250 million head mark for the last few years. And that's something that is probably in producers' favour really, with that kind of low level of supply through time. Obviously, from the 90s to now, producers, particularly in Australia and New Zealand, have become a lot more efficient with their production methods. And so with the lower sheep flock, we have been able to increase our lamb crop each year through those productivity gains. But nevertheless, at the end of the day, the exporting nations flock, or the exporting flock of sheep, is at low levels, and that's a good thing for producers over the long term, particularly when we overlay what's been going on with demand and export demand for sheep meat. You can start to see why we've been enjoying the prices we've enjoyed as producers over the last few decades, once you look at those 2 factors. So just looking at what's been going on more recently and moving from the global to the domestic and focusing in on lamb slaughter, we know that particularly in Victoria, as we go through October, November, December, we have the spring lamb presented, so we get a big influx of lambs that come through. Currently, I think we're around 60,000 head or so a week coming through Victorian sale yards at present, and that's likely to get up to over 130,000 head or so as we head into November. A lot of those lambs that present at the sale yard make their way through to slaughter, so we do know that as we head into the latter part of the season, lamb slaughter in Victoria reaches its peaks. We can see that, particularly with lamb slaughter in Victoria, there were concerns through winter when we had outbreaks of COVID within processes in Victoria. And indeed, when the Andrews government made the decision to reduce the capacity of Victorian processes for a period of time and drop them back to about 65% capacity, it was causing concern. Obviously, through winter, they were able to manage to have that restriction, but there was some concerns as we headed towards the spring flush as to whether, if those restrictions had stayed in place, we would have had some significant issues in processing lamb. If we just switch that slide now and show you what happened through that period when Victoria was a little bit offline, we saw an increase in lamb slaughter in New South Wales, and indeed for about nearly 3 months, the New South Wales lamb slaughter was averaging around 115,000 head a week, taking up some of that capacity that Victoria was unable to process because of their restrictions. We've seen in recent weeks now, with the easing somewhat of those restrictions we've got now in Victoria, in the metropolitan processors that are in the metropolitan Melbourne area can increase their production up to about 80% capacity in terms of processing, and in regional areas of Victoria they can go up to 90%. Given the low flock size we're seeing this season, that should probably be enough now that if we maintain those levels at least in terms of processing capacity, we should be able to manage working our way through the spring flush as it comes through. One of the reasons why there was a lot of concern around what was happening in Victoria in particular is shown by the chart that I've just produced there on the bottom, which looks at processor share of both sheep and lamb in terms of Victoria and New South Wales, so the two bigger processing centres. And you can see, if you're looking just at the lamb figure there, that Victoria for the last few years has processed over 50% of the nation's lamb slaughter and around 40% of the mutton slaughter. And if you go to look at the New South Wales, they're sitting at around 23% for lamb and just under 30% for mutton. So it shows that without Victoria operating at close to full capacity, if we were back down at that 65% level through spring, would have been quite a concern. The ability for the other states to take those additional lambs through spring would have put a hell of a strain on the processing sector, and indeed I don't think the capacity would have been there had the Victorian government not had decided to increase. And it's been a good thing that COVID in this state is still continuing to go in the right direction in terms of the spread. So that's something we need to keep our eye on, and hopefully as we progress into November, the Victorian government will continue to do all the right things and COVID will still remain under control and not get back into any processing areas, because once it gets hold, it's a bit of a worry. So it needs to be out of the processing sector as much as possible, and hopefully not to see it spread into any processing sectors in other states as well. Just having a look at sheep meat exports now, and we can see actually the first chart there I've got is the monthly flows of lamb exports from Australia, so total exports. What we've got is the orange line's the current season, the blue line's last season, the dotted line's the 10-year average, and the grey areas what you call the 70% range, or what you consider normal in a given season. So we can see, if we look back to April, May, as the first stage of the COVID lockdown was 2019, we were pretty much above what was considered normal, and African swine fever was fueling that.
Sorry, Matt. I think we just dropped out for a couple of minutes just there. Sorry, 1 second. I just need to make you the presenter again. Sorry.
Okay.
Do
you want me to go back to the start of this? Do you want me to go back to the start of this slide?
Yeah, I just maybe click make you presenter again. Yeah,
Can you
back
see
to
me
this.
now?
Yeah, that's good. Sorry, I'm not sure what happened there, everyone. Just go back to the start of that one. Thanks, Matt.
So we got that one was okay. Yep, and we'll go to exports. Yep.
Yes, please. Thank you.
No problems. Okay, we'll start again. So what we're looking at here is lamb exports seasonally, so monthly lamb export volumes so far this season. The orange line is the current season. The blue line's last season. The dotted line is the 10-year average trend, and the grey area, the 70% range, is what you consider to be relatively normal flows. So when you get outside that grey area is what you start to say is somewhat abnormal or uncharacteristic movements. And we can see for our lamb exports out of Australia through April, May, when the first stage of COVID was hitting certainly Australia and indeed some of our key export nations for lamb product, we saw a bit of a dip in exports volumes, such that we went below what was the normal range. Thankfully, as we went through July, and July, June, through winter is generally a bit of a low ebb for export flows. Obviously, our prices generally are higher there usually through winter. Not so much the case this year with COVID. It was a bit of a strange season. But you do get lower flows there. And thankfully, as we've come out of winter, we've seen both restrictions ease in the bulk of Australia other than in Victoria. So within Australia, we're starting to get back to some level of normal, but also in quite a few of our key export nations for lamb product, they've started to get back to normal, and so we've been able to get lamb exports back up and above the normal trend in range, and such or even above what we saw last season, which bodes well for the outlook for lamb moving forward, and the fact that the market was able to recover in a relatively quick manner. And of course, we've seen prices do the same as the export markets improved. Prices have started to recover in recent months. If we just start to look at some of the particular destinations, we can see for China, it's been a pretty strong season most of the season, indeed like what we saw last year. And what's driving that demand in China remains ASF, and I'll go on to that in a couple of slides down the track just to see what the situation is there. But we did note that China went through their COVID lockdowns pretty much first as it started. The virus started in Wuhan. So you can see the dip in February was the disruption we saw to our lamb export volumes through the Chinese lockdown. But since February, it's been pretty strong travelling for Australian lamb exports into China, which is quite a good sign for the producer here. And if we take a look at the USA, you can see there that the dip through April, May was the shutdowns that went through in the USA and the closure of their food service industry in particular. Quite a bit, about 60% or so of the lamb exports that go from Australia make their way into that food service sector in the US, and about 60% of those exports that go into the food service sector end up in the higher value fine dining restaurant, so the sit down type restaurant, not the takeaway areas. And obviously with COVID lockdowns, the takeaway areas are managing okay, but the sit down restaurants were struggling under the COVID lockdown, so we did see a bit of a reduction in volumes through that period. But with the return on quite a few of the states returning to a more normalised scenario in the US, with the economy recovering and with the states opening up, we've seen volumes through winter and into early spring getting back to quite strong levels. So again, for the two biggest export destinations for Australian lamb, very good signs in terms of the health of that export sector. If we switch across to mutton exports, we can see not as good a picture as lamb. For the bulk of the year, we're kind of hovering around on the lower end of the normal range. Part of that is to do with the situation with supply here in Australia. with the low flock and tight supply and the improvement in the season, there is, I guess, less in terms of volumes available. Generally speaking, again, through winter, you see that seasonal move where we do get lower volumes of mutton exports going out through winter anyway, as a normal seasonal pattern. But I think some of this mutton flowing on the lower end of the normal range is possibly more to do with our domestic supply scenario than any significant concerns around demand for mutton in our export markets. Although in saying that, there were a few export markets, the US and China were still looking pretty rosy and reasonably well for mutton exports, both running most of the season above average. It's really the Middle East and other markets that are what's dragging the heels with regards to mutton. So I've just shown you there, Saudi Arabia is in the top 4 of our exporting nations for mutton. And you can see the decline through March, April to very, very low levels, uncharacteristically low levels, well outside this scenario is what's driving some of the issues there with the mutton market. With the slowdown in the global economy and the reduction in oil prices and petrol prices because of that general slowdown, parts of the Middle East are not feeling as wealthy as what they might do in a more stronger world economy, and that's flowing through to reductions in demand for products like our mutton. And if we look at some of the other markets, so taking out China, USA, Malaysia and Saudi Arabia, which are generally our top 4 markets for mutton, you can see all the other centres are also operating on a lower volume capacity for demand for Australian export mutton. And again, I think that's just it signifies the general low economic growth cycle we're going through because of the impact of COVID this season. Just before we move off export markets, there is a bright story to tell, and it's looking back at the last 2 decades worth of what's been going on, particularly for lamb markets. And if you focus in on the top chart, what we're looking at is the producer share of the retail spend. So basically, when we're looking at retail lamb in the shops, there's an average price compared to what's the average sale yard price of lamb. What's the proportion of that sale yard price to the retail price? And we've seen since the late 90s through to current day, if you focus on the dotted line, the general trend has been quite positive in that the producer share of that retail dollar has been increasing from around 40% back in the late 90s to just short of 60% as an average. And certainly in the last more recent few years, we've got that as high as closer to 70% when we've seen very strong sale yard prices for our lamb product, and like the growth in those sale yard prices, the retail level hasn't been growing as fast as the sale yard. And what's been underpinning that price, as you can see if you look at the blue line, is what's been going on with regards to that growth in demand that I mentioned about a little while back. If you recall, when I was talking about supply being quite low for exporting nations, while the supply has been quite low and reducing over the last few decades, we've seen demand growing for lamb product in many of our export markets. So when you look at that blue line, that's our exports of lamb as a proportion of lamb production each year. And you can see back in the late 90s, we were about 25% in terms of production of lamb exports as a percentage of our production. And as we move forward to the 2020, we're closer to around that 55% of our lamb exports as a percentage of our production. So it's really showing that steady growth of the export sector, in particular for lamb. And it's not just one particular market, it's growth across a range of markets. And look, it's actually a credit to both the good quality product that producers make in Australia, but also to the hard work that the in-market team does at MLA and MLA does generally in terms of promoting our fantastic product overseas. There's a lot of hard work gone into it, understanding the various different markets around the world and how to penetrate those markets the best way possible. And it just demonstrates all of that hard work over the last few decades is really paying dividends, and those dividends are making their way back to the producer, which is a really good story from a long-term perspective. Despite this hiccup to COVID that we're seeing currently, the long-term picture for lamb markets is a positive one. If we contrast and have a quick look, the bottom chart shows the same charts for the beef side of the business, and you can see that the producer share of the retail spend has been much more stable through time, through the last 2 decades, only growing slightly from about 30% back in the late 90s to about 40% more recently. We did see a bit of an increase through that 16-17 period when the restocker activity took off significantly, and salio prices were growing at a faster rate than the retail side. But it's recently we've gone back below 40% again in more recent times, and you can see that when you look at the exports as a proportion of production, again we've seen much more moderate levels of growth, and I think this reflects the fact that the export beef market for Australia is a much more mature market, and so the ability for it to grow is probably less. Certainly over the last few decades, the ability for it to grow has been a bit more constrained than has been the case for lamb. Obviously, there are a lot more competitors, I guess, in that beef space too, and so it's a very different story when you look at the lamb side of things. It's very much a story of a growth market rather than a mature market, and I think the prospects moving forward is that there still is continued opportunity over the longer term for growth in that lamb space, which again, like I said, bodes well for future seasons once we get out of this COVID based recession that we're in Australia and that's affecting parts of the world as well. So yeah, short term we've got concerns around how COVID's playing out in the supply chain. The higher Australian dollar is a short term again issue, making our product less competitive as the Aussie dollar goes up. And some of those demands in terms of offshore demands, there are concerns short term, but they're really only short term hurdles that while the global economy and our key export nations that take our sheep meat product, why they're going through a bit of a disruption to their economic growth, their demand's probably softer than what it might normally be. But once we get through this period with regards to recovery, that demand will come back with a vengeance, I believe, and that's why I'm saying that the long-term prospects for sheep meat are still quite positive, I think, in terms of future years and more potential to grow. I'll just take some time just to step away from sheep meat and delve into one of the key drivers that we've seen certainly last year and we've seen it this year as well in terms of demand for all types of meat proteins out of China. While the media is focused very heavily at the moment on COVID, and most of the discussions are on the COVID virus, there's still the other virus that hasn't been discussed since COVID broke, was African swine fever. That's still in China. Indeed, it's made its way in the last month or so. It's made its way into Germany, into the Boer population there. So that's led to some concerns around exports of German pork into China, and the leftover legacy of the African swine fever within China for this season, because of the nature of how it impacted their pig herd last season, pretty much took out, the estimates are around 200 to 250 million head of Chinese pig were either culled or died from African swine fever in 2019, and that's 200 to 250 million out of a total pig herd of around 440 million. So a significant reduction. There has been some recent commentary that estimates that the Chinese pig herd is growing again. However, when you look at what's going on there on the ground with regards to pig prices in China, there's been no real reduction in pig prices. So I think some of the commentary around how quickly the Chinese pig herd's recovering might be a little bit overstated. And certainly when we look at the numbers, the gap that we're looking at within China for this current year is estimated to be at around 24.5 million tonne of meat protein missing because of the because of the disruption to their pork industry. The Chinese have been furious at trying to increase domestic production of meat proteins where they can. So this season we've seen significant increases to chicken production, some moderate increases to sheep and beef production, and they've also been aggressively importing meat protein from many countries and many types of proteins. They've had big increases to pork imports, big increases to beef imports, and fairly moderate increases to chicken imports. Despite all these increases, both domestically in terms of production and imported meat product, there's still an estimate of a remaining gap in China of around 17 million tonnes for this season, and there's really no meat product or no one individual country that can supply the void that's there in China. The only way they're really going to get out of this is a longer-term rebuild to their pork herd. That is being disrupted somewhat this season. Recent floods impacting the Three Gorges Dam has been problematic in terms of allowing them to rebuild their pork herd, and also impacting some crops downstream. It's around 35% of the Chinese pork herd is downstream of the Three Gorges Dam, so the flooding has caused some disruption in terms of being able to rebuild. And the other factor is that with a significant cull of their breeding sows in China, the Chinese pork producers have had to revert to using less productive gilts to try and grow their pig herd back. So at the moment it's a slow process. My estimation is it's probably going to be a 3 to 5 year period, best case scenario, before they can get back to the levels of pork herd that we saw pre-African swine fever. So the takeaway is that the demand for meat protein of all types, particularly from China, isn't going to go away in a hurry. If we just take a look now and see what's the situation, again, more domestically in terms of weather. So the Bureau's forecast for the next 3 months is a very positive one for the bulk of the country. I'm sure most producers have been well familiar with this chart of the map of Australia, and it's a real positive. If it proves to be an accurate depiction of what we're going to get, it's probably going to be the wettest season we've seen since the 2010-2011 period. If we look and see what's been going on just in the last 3 months, we can see in particular areas of New South Wales that were heavily affected by the drought in the last season or so has now got some good levels of rain, and that's obviously started to play out in the increase in appetite to rebuild and restock the flock, thanks to that rain. But one cautionary note: if you look at the same decile chart, but over the 2 year period, we can see the extent of the drought that has been experienced in those regions, particularly in northern New South Wales and into southern Queensland. And so, it's a bit to make up, but certainly the forecast from the Bureau is a good one, and fingers crossed that we get something that looks exactly what they're anticipating for the next few months. Certainly, the activity of restockers is showing that there's a real appetite to rebuild. And if we look at a ratio it's a ratio that we're looking at here at Thomas Other Markets, but I can't take credit for the actual idea. That was an idea that was launched by Andrew Woods of Independent Commodity Services. He tracked the sheep offtake, he calls it. I'm calling it a sheep turnoff ratio. Basically, it looks at the reduction in sheep numbers per annum through either slaughter or live export as a proportion of the flock. And we can see that when the sheep turnoff ratio is below 14%, we tend to see an increase in the flock size, so a rebuild. And when we're above 14% sheep turnoff ratio, we see the flock being liquidated. So that's pretty much been the case for the last 3 decades. That situation has held, the 14% threshold. And so if we look to see, this data's lagged a little bit, so we've only got the most recent data up till the middle of the year. But as of June, the sheep offtake ratio was at 14.3%. So just on the cusp of moving back to a technical rebuild. Certainly with the outlook that we're seeing for the next final quarter of the year, I'd anticipate that if we're not right now in a rebuild phase, we will be by the end of the year. And so, yeah, 14.3%, we're nearly there in a technical rebuild. Certainly the most recent MLA sheep industry outlook that was released in September, also they were indicating a similar picture of rebuild by either late this year and carrying through into 2021, given the very positive outlook we're expecting for rainfall across much of the country. If we take a look at East Coast spreads and West Coast spreads for a couple of categories of lamb and sheep. So the chart I've just got there is showing the prices from last week, and it's the percentage spread to the ESTLI of a range of categories of lamb and mutton. And the chart basically shows where the current week is sitting in terms of percentage spread, and what's the normal range, which is the grey area, and the black line is the average. So it gives you an idea as to which categories are quite sought after, and you can see in particular with regards to restockers across the East Coast. For much of the season, we've seen the premium spread of East Coast restockers to the trade lamb above the normal trend and very much outside the normal range. So that's really showing us a indication of how optimistic producers are and how much they're prepared to pay for restocker lambs compared to ESTLI as a benchmark. And indeed, if you look more recently to that spike that went through August, September, when the Bureau outlook was released, we saw a bit of a flow of activity, particularly in New South Wales, was driving this spread to significantly high levels. And given what New South Wales has been experiencing the last few years, there's no surprise that a lot of that restocker activity is being driven out of the northern parts of the country there that have sheep and lamb in them. If we take a look at East Coast heavy lamb, a bit of a different picture. You can see the impact of the Victorian processor shutdown through that July-August period played out. We already were starting to see heavy lamb coming off through winter, and part of that reduction was the impact of COVID on our export markets through that period of time, and then further exacerbated, particularly when Victoria went into its restriction phase of 65% processor capacity. We saw a period through August there when heavy lambs went out of favour pretty much, and the spread went to a significant discount, well below what you'd expect for this time in the year. Thankfully, as we've seen a recovery in our export markets in the last few months, and also the news of the Andrews government increasing the processor capacity in Victoria, we're seeing that spread get back more towards normal territory. If we looked at just the Victorian heavy lamb, it's actually back in the range now. So, I suspect that the East Coast number will continue to kind of move back towards more normalised levels as we continue to get those processors in Victoria back up and running as close to full capacity as possible. One final one just to look at is what's going on with mutton, and again, I'm contrasting this particular season of mutton. We can see it's above the normal range pretty much for most of the season, or at the normal range, the top end of the range, or above it, in terms of how aggressively mutton's been sought after. It gives you an indication as to how tight the supply is and how the incentive is to restock. And if we look at the comparison of the mutton spread to the ESTLI this year compared to the last time we saw a very favourable season, which was that 2010-2011 period when we went through the last significant kind of rebuild of the flock, and a very wet season like what we're expecting in the next few months, we can see that spread of mutton to Eastern States Trade Lamb Indicator is pretty much mirroring that season we saw in 2010-11, and just very indicative A, the tight supply, and that B, the very favourable season, and that incentive to restock is definitely there. Talking of restocking, we've just got a bit of a quick margin matrix that I've got, just looking at where we're at. We've seen a recovery in price for most categories in the last few weeks to months. After that sell-off we saw in markets through winter, which was a bit uncharacteristic. So we've been moving back in more positive directions for producers. And just taking a look now at the East Coast, if you're looking at, say, a restocker price as of yesterday, the Eastern States restocker was about $9.10, I believe, and heavy lambs at about 7.90 cents. So if you take a look at the matrix, it just shows you what the scenarios of buying a 30 kilo live weight restocker and selling it as a 50 kilo heavyweight lamb, accounting for $20 of costs per head, dressing 45%, skin value of $5. We can see the matrix shows you the dollar per head profit or loss on that particular trade. And if you run the numbers now, just looking at that $9 kind of level, you can see there's money to be made. And indeed, if you project out, buying between $9 and $9.50, and if you're able to offload those lambs at $6.75 or above, there's still some money to be made in that particular trade. So it is showing you that despite these improved prices, that when you run the numbers, there's still money there. So that's supportive of the market kind of moving forward for the next part of the season. The spring flush in Victoria obviously is one thing that might weigh on prices as that goes through, but certainly as we head into next season as well, while the export markets remain chugging along nicely again, the prospect longer term is still pretty good despite the sell-off we saw through winter. So turning to a bit of a fair value model, this one's based on a quarterly assessment, so projecting forward to the next 4 quarters to the middle of next year. We saw the sell-off in the Eastern States Trade Lamb Indicator, as the chart displays, was that uncharacteristic sell-off we saw through winter. Normally we see prices increasing through winter, but this year, because of COVID, it was a bit of an out-of-the-box year. I published this particular one on the TEM website probably about a month and a half ago now, as we were going through that late winter sell-off, when the Eastern States Trade Lamb Indicator was going down through, I think it was around 6.70 cents. And for Q3, the fair value model was saying that about 6.50 was the base, and that's what I was talking about on the article on the TM website, that around 6.50 I thought would be a bit of a base for Q3. We got to 6.38, I believe, and then the market turned. And obviously, as export markets improve, we've come back up above. I think we're about $8 now as of yesterday on the Eastern States Trade Lamb Indicator. So back more into the middle of the range, or the slightly upper end of the range, with some of the disruptions that we're seeing in terms of the higher Australian dollar, still concerns around global growth and general COVID concerns. I'd expect that for the remainder of Q4, we're probably going to be kept in the lower half of the fair value range. So that would suggest that around the 8.30, 8.50 cent level for Eastern States Trade Lamb Indicator is a bit toppy. We have seen that coming down in the last few days. And as we start to see an increase to the spring flush in Victoria through November, that's probably going to provide a bit more headwinds for the trade lamb market. So there's a chance that we see trade lamb back down to that 650, 700 cent level as we go into the depth of the spring flush through November. But I think all things considered, if we don't get another issue with processors in Victoria or elsewhere, and processors are able to continue to move towards as close to full capacity as possible, then I think we possibly might have seen the low already for the Eastern States Trade Lamb Indicator at 6.38 cents. Certainly the fair value model suggests that kind of 650 area, low 600s is a bit of a base for the time being. But yeah, my personal view is that we've seen the low already this season. we might see some continued pressure in the next month or so as those new season lambs come through and hit the market. But yeah, like I said, that 650 level, 600 cent level, I think should be a fairly reasonable base moving forward, as long as we don't get any other significant disruptions, you know, that are COVID inspired to processes. If we project this modelling out to the next few years based on Aussie dollar forecasts from the key Australian banks and what MLA are putting out as a most likely scenario for lamb slaughter in the coming years, and the rebuild of the flock and increased slaughter as we head into 2022-23. I've got a projection of you know, slightly softening prices, but in the overall scheme of things, still not too bad compared to historic levels. We're still talking, you know, a low level of around the 625, 600 cent as a base through the season, and indeed, you know, heading up towards the kind of, you know, 870 level for a high, maybe as high again as $9. We might not see Eastern States trade lamb getting up above 10.25 or thereabouts in the near term. And certainly with the Aussie dollar continuing to probe higher, that's going to make it difficult for trade lamb to get back up into that kind of mid 900s. And if we project a bit slower global recovery, which is what the numbers here are showing for this particular outlook, that's the picture. And this is probably painting what I consider to be the worst case scenario of Aussie dollar continuing to move higher towards 80 cents and a slower global recovery. For those that are more optimistic and want to say, well, what happens if the Aussie dollar, you know, kind of stabilises around this level, doesn't go any higher, and we get a bit more of a V-shape, a bit more of a quicker recovery? We can plug those numbers into the model, and that shows us a slightly less of a kind of headwinds against trade lamb. So, you know, either way, you know, whether it's a worst case or whether it's a bit more of a milder scenario, we're looking at, you know, pretty good prices historically for trade lamb over the next few years. And certainly, as if you project this further out into the latter part of the decade, once we do get very much clear of COVID in our key exporting nations, and they come back to much stronger stages of recovery, it's likely we're going to see that forecast model start to trend up again and follow a similar type trajectory we saw through 2014 to 2018, where we're seeing that growth, that continued growth in the export side of the market. And I think as we've seen historically over the last 2 decades, that growth in the export market has been able to underpin much stronger sale yard prices. And I think you know, as we head towards the end of this decade, I think that's going to return again, where we're seeing that growth in those markets outstripping the supply, and generally speaking, the prospects for the sheep meat market, you know, over to the next decade is very strong, even despite the setback we've seen in this year and the next year or so, just based around COVID. That brings me to the end. I've just got a quick summary again, a couple of those social media links for those that didn't get them at the start. Like I said, if you've liked what you've seen tonight, there's plenty of stuff on the TEM website. It's absolutely free access. So yeah, feel free to jump on. And if you want to get updated when there's new articles, just let us know your email address, and we'll put you into the mailing list, so you're first to hear about what we're putting up on the site. And I'll pass it back across to you. I think, Hilary, do I need to do something now to send back to you, or can you just take over from the...
No, if you want to leave that screen on,
that one? Okay,
Matt,
yep.
yeah, if that's all right. Otherwise,
Yep.
yep. Fantastic. Well, thank you so much. A really good webinar to kick off on tonight, and some really positive messages towards the end there. So a little bit of short-term pain for long-term gain. I think everyone can handle that. So thank you, Matt. Just to give Matt a bit of a break, as he alluded to at the beginning of the webinars are recorded and will be available on the MLA website at a later date. They're under extension, training and tools. If you can't find it, just email me. and I can point you in the right direction. And as I stated to begin with, if you do have to head off before question time, please take the time to do the survey that you will be presented with when you click out of the webinar. That would be greatly appreciated. And if you do have any questions, please write them in the question box now, and I will relay them to Matt. So Matt, if you're right to go, the first one from Terry says, Matt, do you think industry-wide assessment and payment on lamb eating quality drives producers' share of the retail spend higher?
If you're talking about from a domestic setting, I don't think domestically anymore we're seeing it's not the domestic market. I don't think that's driving the underlying price, and that retail that kind of retail share or the producer share of the retail dollar. I think the bulk of it's been the growth in that export sector, as the graphic showed. I think there are some other aspects that have played into the favour of the producer, though, and one of them has been increased efficiencies in the supply chain. That was something I didn't touch on, but if you recall the expansion of the DEXA scanning tool, and when the DEXA scanning tool was able to be combined with robotic cutting within the meatworks, that's enabled quite a high degree of efficiency gains to be flowed through the processing sector. So I think part of the benefits of that efficiency gains has also flowed through to effectively to the producer, and that increased share. So I think the hard work being done again by some of the direction from MLA initially, and then I think it's Scott Technologies that have the patent on that particular product. But yeah, I think that the supply chain there are doing some great work to increase those efficiencies, and that's still being rolled out, I believe. I think now nationally for lamb and sheep processing, it's at around 18%. I'm led to believe in terms of 80% of the processing is now done with that DEXA scanning and robotic cutting for the lamb space, whereas when you compare that to the beef sector, I think the rollout's about 8%, I believe. So it's been a technology that's been embraced very quickly by the lamb and sheep processing side. That's I think been underpinning some of that additional ability to capture a higher proportion of that retail dollar because of those efficiency gains. So I don't suspect that it's the eating quality aspect of it. I don't think is the underlying driver.
Thanks, Matt. Well, that covers my question I was going to ask. All right, the next one from Colin. Does the mutton export figure include live export? Lower live export does not seem to be helping mutton exports to Saudi.
Yeah, those figures I showed you for both lamb and mutton are the boxed products, so that's not live export at all. So they're purely the chilled and frozen shipments.
Great, thank you for the question. So in regards to ASF and the significant protein deficit, is there a chance it will force them China to find meat alternatives?
Look, I think the size of the gap that's left there, that 70 million tonne, I think we're already seeing that there are, and if you say meat alternatives in terms of like a fake meat product, I think no is the answer to that one. The phenomena around the fake meat as a product is still very much the growth of that is really in the very developed world as a product. I think if you look to the developing world, that's still a fairly traditional market space by and large. So I can't see a big shift into fake meat product in China in a big hurry. I think the cost base for that is still too high to be competitive. I think when you look at potential for movement into non-meat proteins, I think there's some capacity there certainly. And when the non-meat proteins are at a price point that is economic, there'll be some large sections of the Chinese populace that will have to reduce their consumption of meat, and that's not their preference, or they might even miss out depending upon where they sit in the overall hierarchy of the Chinese distribution of income. I think when you look at like the concerns around fake meat as a going to capture the market share of the real meat product, I think that's, when you're looking at the developing world, I don't think that's a concern. I think the growth of fake meat really is it's a phenomenon that we're seeing in the very developed Western world. Almost all of the literature and research that I've seen on the growth in meat protein demand in the developing world is that it's going to continue in a big way as these countries become more populous and more wealthy. And it's not just China, it's other countries as well around the world. There's a significant appetite for traditional meat product in that space, and I think that's going to continue for many decades.
Thanks, Matt. I've just got one more question here. So if you do have another one to get into, Matt, send it in ASAP. So Matt, does retaining or the restocking of the flock this year, will that give processors any leeway if something does happen with another lockdown?
I'm not quite sure if I understand the question correctly there. When you say any leeway, I think certainly if you're saying, does it, if we get another episode of an outbreak of COVID in a significant episode in abattoirs, whether it's in Victoria or elsewhere, I think the uncertainty around that does kind of, I guess it takes the power balance away from producers in this season with how good the rainfall forecast is and the appetite to restock. I think at the moment the power balance is shifted towards the producer, like what we saw in winter when the disruption to the Victorian meatworks came through. I think that shifted the power balance back, a bit more in favour of the processor during that period of time, and that's certainly, from a producer perspective, that's certainly a risk there, because generally speaking, the power balance isn't with the producer, and the exceptions are when you're going through the tight supply and the good season we're seeing this year is when the producer gets to benefit. So I think the risk is that, it's probably more of a broader supply chain risk though, and it's something I've said a few times when we're looking at processing, the processing sector and the supply chain, is that irrespective of where you sit in the supply chain, it's never a healthy thing to have one part of the supply chain being hard done by. Ideally, supply chains that work well are ones where all of the participants can benefit mutually. And so, if there's a time when, like when we go through drought and we see producers that are suffering, that's not good for the supply chain, broadly speaking. Equally, and at TEM, we produce a margin model on beef margins. So I know it's not quite specific to the lamb side, but certainly this year the beef processor margin model has shown some significant losses that have been occurring in the processing sector this season because of the, again, the similar scenario to lamb, the low supply and the tight season is causing very high beef prices. That's overlaid with a beef export market that isn't as strong as it could be because of the COVID problems. So, it's been a perfect storm against processors this year in the beef space, and certainly they're suffering this season. And that kind of thing, while producers, are benefiting from those very high sale yard prices, it's not a good thing long term for the supply chain to have the processing sector suffering. Certainly they have deep pockets and they're very used to these cycles, but it's one of those things where it can be sustained in the short to medium term, but over the longer term you really need to see a healthy supply chain so that all of the participants benefit, and I think that's where we should all be working towards.
Excellent, thanks, Matt. So a few have come through. So the next question, Len Steiner has stated that China is making better than expected progress in rebuilding the pork industry. Do you have a view? And then there's a second part to that question. Also, there is a view that there may be food inflation in the next few years. What does that mean, and is that plausible?
Yeah, so I did see the Len Steiner story out. I think it was out today, indeed. And he's saying that estimates of the Chinese pig herders now that they're 10% off their pre-COVID levels. I stress that these are estimates, certainly. Len's a very respected analyst in the meat space, so I wouldn't want to kind of discredit what he says. But from my perspective, I think, and particularly when you're talking about statistics coming out of China, as we saw when ASF was developing, it took them 8 to 9 months before they came clean in terms of what was going on with their pork herd when it was getting decimated. I think you've got to take a bit of a grain of salt in terms of what's what the data says, or what the Chinese are saying in terms of how well they're getting back on track. I think, like I stated, the issues around the Three Gorges Dam flooding, I think is a concern in terms of how that's disrupting them. I think the use of gilts in their reproduction phase, I think, is limiting how much they can increase. And I go back to whenever I look at data coming out of China, one thing that you can't really manipulate is what the price is doing. And certainly so far this season, the price of pork in China has remained at very elevated levels. I suspect it's remaining at those levels because there's still an imbalance in terms of not enough pork product and a lot of demand. So the price to me tells me that they've still got an issue there. So I don't think that they're doing as good a job as they're saying at rebuilding their pig herd. We've got to remember that ASF as a virus is, there's no vaccine for the ASF virus. It's highly contagious. It kills 90% of pigs that it infects. And it's a very virulent virus that can remain on surfaces and in product in frozen pork product, it's known to last up to 3 years. It can remain for many months in dirt and fecal matter and dust around the farm. It can remain on surfaces for a long period of time, up to a matter of weeks. So it's not an easy virus to get rid of. And indeed, I have seen reports just recently, last week, that they've got further outbreaks in provinces in China, like re-outbreaks of ASF. So it's a bit like the COVID scenario. While there's no vaccine, it can keep popping up over and over and keep causing issues. So I'm not as bullish on the prospects of the Chinese rebuilding their herd in a quick manner. And like I said, I think the best case scenario is something like a 3 to 5 year period from now to when they get back to levels pre-ASF.
Thanks, Matt. And just this.
No, sorry, the other question. Yeah, the other question was around. Can you?
Yep. So there is a view that there may be food inflation in the next few years. What does that mean, and is it plausible?
Yeah. Look, I mean, if you're talking food inflation within Australia or globally, it's probably it's a hell of a broad one, that one. I think you can only look at historic movement in terms of what's gone on with regards to particularly food-based or agricultural product that's food-based. There's been an ongoing drive in terms of efficiency that's enabled us to produce at more and more efficient manners and being able, we've been driven by those cost factors to become as efficient as possible. I think that's kept a bit of a pressure on food inflationary aspects. It's one of those things where certainly we've seen the disruption to the supply chain that we saw this year through COVID and how that could have short-term measures of food inflation. We saw it to a degree within Australia, but certainly in the US when they went through their COVID issues in the meatworks in the US, it was about a month's worth of disruption to their sector, and they were much more impacted than Australia's meatworks in terms of COVID. They had some significant increases to kind of food costs and it was a short-term concern. I think it demonstrates that through these types of unforeseen aspects, it's shown how the just-in-time management systems that we operate on now, and it's across not just the food sector, but across many other aspects of the product we buy, that was found to be wanting a little bit. And so there's concerns short-term around those spikes, but I think Longer term, I think the drive to efficiency that we've seen, for many decades, I think is going to continue to run its course. I can't see a significant outbreak of huge food inflation kind of hitting the planet in the next decade or so. Maybe as we head more towards the 2030s, 2050s, with the growth we are forecasting in the developing world in terms of demand, and potentially if you overlay concerns around climate factors, I think as you progress out 15, 20 years, if we get much more problematic climate scenarios around the world that are impacting the ability to produce, not just within Australia but everywhere, and you overlay that kind of supply issue with the demand growth, then potentially down the track I could see some issues around food inflation, but I don't think it's not an immediate concern. I think it's a much more longer term prospect.
Great, thank you. Thanks for the question. All right, last one. Where would new / emerging opportunity markets be?
For sheep meat?
Yes.
Look, I think actually part of the opportunity I think lies in some of the existing markets. If you look to somewhere like the US, which is a big market already and a growing market, but there still is from like I said in the webinar, that a lot of the product goes into that food service high-end kind of restaurant sector. I think there's real growth opportunities to try and push lamb into the type of product that the retail shopper buys and brings home to cook. It's not, lamb in the US isn't generally a product that gets eaten a lot in the home, and I think that's partially perception and partially lack of awareness around that product. So I think there's certainly some growth that can be done in existing markets in terms of showing those consumers that are already consuming lamb that it's not just an item that you have when you go out to a fancy restaurant. Another sector I think that's an area that could be explored, but there are issues around trade and tariffs, is into India. Now, India's got a very high tariff structure. India have quite a big sheep flock as well. If you look at where they sit, I think they're just behind Australia in terms of flock size. So globally, the Australian flock's about 6% of the global sheep flock. China's the biggest with 13%, and India has about 5% of the sheep flock. So they have got a big amount of sheep there. India also exports, so they're one of those exporting nations, but it's a very small proportion. I think it's something like 2% of global exports, or 2 or 3% is Indian sheep meat. But another area that's a huge potential marketplace, but I think there needs to be a lot of work done there around access and around like a free trade type scenario, because the tariff structure at the moment in India is pretty prohibitive. But that's a potential opportunity, that's kind of begging to be explored. I think is a huge market. They definitely have a taste for sheep meat as a product. So that's, I think, one that could be further explored, given the right structures in place around reducing those tariffs.
Perfect. Thank you, Matt. All right, that's all for the questions for this evening. Thanks very much for kicking us off on our first webinar for this series, Matt. It was a really informative presentation, and if you want to get in touch with Matt to ask any further questions, hit him up. All his details are on the slide there now, and certainly get involved with the Thomas Elder markets. They're really putting out some informative information, some really good information at the moment. So thank you, Matt and the team. And thank you everyone for participating tonight. We'll see you next Wednesday for fodder conservation in late spring with Michelle Jolliffe. And good evening. Thanks, Matt.
Thanks, Hilary. Cheers.